Property tax is coming up, and because of that reason, I get a lot of questions from people asking me if it's a good idea to defer their property tax. Well, it depends on personal choices, also personal situations. My name is Sandy Gum. I'm the insurance advisor and private equity advisor. And in this episode, Real Money, Real Talk, I'm going to talk about the pros and cons about property tax deferral programs, as well as whether you should defer your property tax. First of all, what is a property tax deferral program? A property tax deferral program is actually a loan that you get from the government to pay for your property tax. If you qualify for certain criteria, you're able to defer your property tax to free up the cash flow, either to relieve the pressures of the payment or potentially also invest the differences to get advantage of that as well. Generally, there are two types of programs. One is for senior and one is a family with a child. Property tax deferral program varies from province to provinces. It is a loan program for primary home, and you can apply it either if you're a Canadian citizen or a permanent resident live in Canada for at least 1 year. For example, in BC, for the senior program, you need to be at least about 55-years old for the calendar year, or a survival spouse, or with disabilities defined by the government. However, this varies again from province to provinces. Some provinces may require above 65 or a different age. In addition, this loan program also requires you to maintain a minimum percentage of equity that's after deduction of mortgage, interest, and other penalties. To find out what the equity needs to be maintained, you can check out the provincial government to see how much you need to maintain that minimum percentage of equity. For example, in BC, you will need to maintain at least 25% of equity that's after deduction of mortgage, interest, and any other penalties. Once you get approval, you will have the tax lien on your property, and then the program will pay for the taxes that you defer. However, you need to know that any outstanding balances or penalties you need to pay in full before the program can start. The interest of the deferred property tax is charged on simple interest, and the interest rate is not more than 2% of the bank prime rate. However, this particular example is specifically to BC residents, so if you want to find out the interest rate for your province, you can also again check the provincial website that are applicable to where you live. Let's take an example. Say you are 65 today, and using BC as an example, the BC assessment value on your home is 1 million and your taxes are 7,000 per year. Assume you will stay in your home until age 80 when you want to downsize. If you have deferred taxes throughout, what will you owe when you sell? Well, it's simple math actually, because it is, well, simple interest. There are 15 years until you are age 80, and 7,000 times 15 years equal to 105,000. If we assume a level 1%, it will equal to 8,400 in interest. So your total owing will be $113,400. The interest and the balance of the property tax only gets paid off when you sell the property or when the title is being transferred to another person. Here's a summary of pros and cons of property tax deferral program. On the pro side, first, you're able to relieve the pressure on mortgage payment. And the second, you're able to increase the cash flow in your household. Third, you may be able to invest the differences by deferring your tax and then get appreciation from your investment. On the other hand, the cons are, first, you will have a lien on your property. Second, you will need to maintain minimum equity. In this case, in BC, will be 25%. That's already after deduction of mortgage, interest, and any other penalties. And the third, you may have a limit option when the time comes for renewal of your mortgage or refinance your mortgage or applying a new mortgage if you want to buy a second home. So should you defer your property tax? Well, you should ask a few questions yourself first. or consult with a professional. First, you may want to ask, do you currently have limited income but has quite a bit of equity in your home? Are you looking for increase of cash flow so that you can invest the differences? Third, how long you're going to be staying in that home and how long you want to defer your tax. If you're considering using property tax deferral program to invest the difference, but you need to be aware that your end financial product needs to be able to perform outbeat the interest on the program. If you know someone who is considering property tax referral programs, please like and share this video, and I hope this is helpful. Remember to click the button, subscribe my channels, and look forward to see you next week.